I see a lot of people that work very hard, but trust me, I've worked very hard my entire life. You can work 4,000 hours a year for 20 years running and still not make any progress if you're not sophisticated with regard to the way you construct your finances or your balance sheet. So make the capital work for you. I've found a lot of other ways to raise money to buy Bitcoin that I didn't know then. So
I did notice that.
I guess the one thing that's really evolved for me is my awareness, or at least my appreciation for Bitcoin as a tool to digitally transform capital markets.
Okay, all right, fair enough.
I guess initially I thought of it as a tool to save the company or save the individual. Mm-hmm. But now I actually see it as a tool to rebuild all the capital markets in the world, which means all the credit markets, all the equity markets. So I guess it's another way to say it is my view of Bitcoin hasn't really changed, but my view of the equity markets and my view of the credit markets has changed. So I guess if you want to riff on that a bit, it's like you learn Bitcoin, and then what's your conclusion? The big overarching conclusion is not how good Bitcoin is. It's just how defective the fiat currencies are that we used to rely on before Bitcoin. So because Bitcoin is a pure monetary asset, it causes you to realize how inadequate all the previous monetary assets were in the previous 10,000 years.
MicroStrategy co-founder Michael Saylor claimed that Bitcoin's market cap could grow from the current $2 trillion to $200 trillion. He predicted Bitcoin could reach $10 million. With 21 million tokens, that's about $10 million per Bitcoin. In a March 2025 interview with CNBC, he predicted annual growth of about 20%. Bitcoin is currently worth about $2 trillion. It will reach $20 trillion and then $200 trillion. He added that Strategy has purchased nearly 500,000 Bitcoin to date and has met with regulators and the U.S. Congress to discuss cryptocurrency policy. Strategy's Bitcoin holdings are already colossal. It currently owns about 628,800 Bitcoin, or about $72 billion at the current price. That represents just over 3% of the 21 million Bitcoins in circulation. Saylor has claimed that Strategy could one day own around 7% of all Bitcoins, insisting that everyone should have a piece. Strategy's shares have risen 2,488% since its first Bitcoin purchase in 2020, reflecting investor confidence in its cryptocurrency strategy. He notes that historically, no Bitcoin holder who has held their assets for 4 years has lost money, demonstrating his confidence. Saylor links the $10 million target to specific adoption milestones. He predicts that by the time major banks allow customers to buy Bitcoin through their apps, a single cryptocurrency will already be trading at around $1 million. And when major financial institutions begin recommending Bitcoin as a popular stock, the price could approach $10 million per cryptocurrency. According to Michael Saylor, Bitcoin is on its way to hit $10 million per coin. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Michael Saylor's view on Bitcoin and the overall crypto market.
People that thought they were going to save their hard-earned wealth by buying an apartment and Airbnb-ing it, or I invested in real estate, or I decided to buy a house instead, and then they realized that the house was weight around their neck. And if you look, if you look at the writings of libertarians and you look at the writings of the Austrian economists, right, whether it's, Rothbard and the Libertarian Manifesto, right, or von Mises or Hayek, they're very long on history. They tell you the history of money, the history of libertarian causes, the history. And then they have a lot of criticism. This is why it's wrong. But they're very short. They're very lacking on the science.
MicroStrategy stock surges after Bitcoin purchase. The company, which does business as Strategy, filed with the Securities and Exchange Commission, SEC, that it acquired 21,021 Bitcoins for $2.46 billion, or roughly $117,256 each, between July 28th and August 3rd. This latest purchase is one of Strategy's largest since the company began purchasing cryptocurrencies in the late 2020. It's worth noting that Strategy made its largest all-time purchase in November 2024 with 55,500 Bitcoins for roughly $5.4 billion, or $97,862,000 per token. He also offered a rare glimpse into the company's methodology. Short-term, Bitcoin is a trading asset. Long-term, it's a treasury asset. Saylor appeared to echo the sentiment expressed in an earlier social media post where he urged cryptocurrency enthusiasts to hang on tight or ride out market volatility and hold on to their digital assets for the long term. Michael Saylor has once again demonstrated his unwavering confidence in Bitcoin by completing the firm's third largest acquisition. During the second quarter of 2025, Strategy acquired 13,005 Bitcoin for approximately $811 million, bringing its total portfolio to 214,995 units. This significant acquisition not only demonstrates Saylor's confidence in the long-term value of Bitcoin, but also lays the groundwork for the firm's multi-decade treasury strategy. Since adopting Bitcoin as its primary treasury reserve in August 2020, Strategy has adopted a steadfast buy and hold strategy. Saylor reiterated his mantra that Bitcoin offers superior long-term returns compared to fiat assets and predicted that 2 decades from now, the market will regret buying more. He emphasized that the firm's strategy is based on patience, scalability, and the disciplined reinvestment of new capital into new Bitcoin purchases over a multi-decade horizon. Following his latest purchase, Strategy's Bitcoin treasury is valued at approximately $13.4 billion based on current spot prices. The average cost across all assets is around $30,770 per Bitcoin. On-chain indicators show that the pace at which cryptocurrencies are moving from exchanges to cold storage has accelerated since the second quarter, suggesting that institutional peers could follow Strategy's lead in accumulating reserves off exchange. Investors applauded Strategy's bold purchase, boosting the company's shares by 4.2% on the day of the announcement. Saylor believes Bitcoin is establishing itself as a modern alternative to traditional stores of value. He stated that owning as little as 3% to 7% of the total supply would be substantial. He argued that Bitcoin should be in the hands of institutions, not dominated by a single company. Strategy's actions seek to broaden access, not limit it. More than 160 companies have added Bitcoin to their treasuries. Publicly traded companies accounted for nearly 1 million cryptocurrencies, or roughly 4.5% of the total supply. Saylor sees this as the beginning of a broader financial transformation. He compared Bitcoin's rise to the decline of traditional physical stores of value, such as real estate and private equity. The transition from physical to digital stores of value appears to be accelerating. As companies like Strategy continue to buy Bitcoin, this trend signals a potential shakeout. Real estate may no longer be the preferred destination for corporate wealth. Bitcoin is establishing itself as a new standard, and institutions are starting to take note.